Good morning, everyone. Am I audible? Good morning, everyone. Welcome to Office Adda 24/7. My name is Niharika, and I am with you with the area of AFM. Okay, if we talk about the topic of AFM, that is, the examination is going to be conducted within less than 16 days now. So we are going through our series of 60 days, 60 classes. So continuing it further, and we'll be talking about another set of questions regarding the same. So let's begin with it. Okay, today it's gonna be more towards the module B there. More questions are from module B plus a few questions regarding module C. But you can say that this is purely more towards module B today, right? So let's begin with the area. This is the first question. The first question is from the area of cash flow statement, right? So let's talk about it. It says that for the purpose of preparing cash flow statement, which one of the following is considered as an operating activity? That is acquisition of machinery, purchase of goods for sale, issue of debentures or repayment of term loan. If I talk about AS3 or Ind AS 7, both of these things are cash flow statement, right? Both of these things are covered under cash flow statement there. What happens in this area? Number one is acquisition of machinery. Number two is purchase of goods for sale. Number three is issue of debentures. Number four is term loan. Look at this point. Operating means the one which is related to business, isn't it? It is related to the business activity. Now it is related to the business activity. What can we record here? If it is related to business activity only, acquisition of machinery is investing. Then issue of debentures is financing. Repayment of loan is also financing. So in this case, only one that relates to the operating activities, purchase of goods for sale. Operating means anything which is related to your business. Everything else is not related to your business, but this portion is related to your business. So the correct answer is the purchase of goods for sale. Now this is the only among all of them which is related to your day-to-day business activity, hence called operating activity, right? Next question. Which one of the following is a use of funds? That means if I talk about the fund flow statement, which one of the following is use of funds? They are not getting funds, they are utilizing the funds, right? Is it increase in capital? Is it increase in current liabilities? It is increase in term loan or increase in receivables? Which one of the following is a use of funds? If talk about using the funds, increase in capital is getting the funds into the business. Increase in current liabilities is again getting the funds into the business. For example, current liabilities can include our creditors, outstanding expenses. We are getting some money now currently, and then we'll pay off people accordingly there. Then increase in term loans, again we are getting more money into the business. We haven't utilized it, but we are getting more money into the business in this case as well. And then comes the last one, that is increase in the receivables. In this case, people haven't paid us yet, they are yet to pay us, right? So if they're yet to pay us, then in this case what would be the answer? It is increase in receivables, because we are giving them a credit period, isn't it? I've given them a credit period, right? So when we talk about the credit period there, this means we are giving them a particular period of time where they can give us the money later on, है ना? That is the point. So if they can give us the money later on, that means it is a kind of application of funds itself. Next question. It says, from the for the purpose of preparing cash flow statement, which one of the following is considered the operating activity? Oh, this question is repeated. The question answer was purchase of goods for sale. Here comes the next question, everyone. Schedule 10 of the balance sheet of the bank provides details of. This question relates to banking companies exclusively, because there are two kinds of companies that we can talk about now. One is the normal companies which are covered under Companies Act 2013. Their format is given as per section 128 129. While when we talk about the balance sheet there of a banking company, it's a little different from that of the ones which we are able to see in terms of company accounts. So in this case, the schedule 10 of the balance sheet of the bank would be including fixed assets, current assets, investments, or other assets. Among the following, which is the one which talks about Schedule 10? The Schedule 10 is basically fixed assets. Different things now. A few things to remember. The uh, the the schedule for the provisions and contingencies is not a part of the balance sheet, though it is a part, but not shown in the total of the balance sheet. It is shown after totaling the balance sheet. It's a kind of footnote, right? So the provisions and contingencies are shown there. After fixed assets, we have the current assets, and then we have the provisions and contingencies, which are shown by the end. Next question. The rebate on the bills discounted refers to, whenever we discount a bill, what does the rebate refers to? Concessional rate of discount for priority sector, rebate provided to priority customers of the bank, unexpired discount, or none of the above. If we talk about the rebates on bill discounted, if I talk about the bills discounted, sometimes what happens is someone discounted a bill. Basically, there was a particular person A, there was a particular person B, right? And here comes our bank. So I'm keeping three different scenarios there. So there are three different parties. Go through this very carefully. This is quite confusing. That's why. Number one, A had bill against B there. So A held a bill receivable, B held a bills payable. B agreed that someday he has to pay a certain amount of money to A. That was the point that was clearly stated that yes, that A will get money from B. Now A doesn't have the time. So what he did was he said, I need the money right away. He sold this bill to bank and bank gave him bank balance. But the point is A was supposed to hold this bill for 3 months. But after a month, that means the bank is holding the bill for 2 months, right? Now the bank will charge certain amount of money for that particular period for which it is holding the bill. That period is called the discounting charges. The charges are withheld by the bank and the remaining amount is released for the person. For example, if the bill was for rupees 10,000, the bank will give 9,500 to A and will recover 10,000 from B, making the bank earning an amount of 500. Now, what happens is when we say rebate on bill discounted, when this bill is basically repaid by the person before time. This also happens sometimes. Maybe B would come to bank before time and say, I would like to get my bill done. Now, the point is, in this case, what is happening? This rebate is because the particular person is paying before time, and if anybody makes a payment before time and you do not acknowledge it, what will happen? Will that particular person ever pay in advance ever? No, he will not. He'll be like, acha, I paid in advance and then even I'm not even acknowledged. Why should I do that? Right? So there is no benefit for me. But if he pays in advance, they are actually given a specific benefit. They will be charged a little less amount, right? And that is what we call it as the unexpired discount. The point is, if B pays to the bank before time, the bank is bound to give him a specific amount of discount. That discount is called unexpired discount. In terms of bills of exchange, one of the most important areas is to look forward to all these things. These are simple looking, but at the same time complex topics. Simplicity is there, but the point is there are so many transactions at the same time that anybody can get confused over this, right? Next question. Which one of the following is not amongst the core banking system? Or you can say the core banking solutions. It supports multi-currencies operations. It provides 24/7 operations. It provides improved customer satisfaction, or it increases the bank's profit as customers are charged extra for the core banking. Oh, I hope it is visible right now. What's the correct answer? See, the point is, it is an internal functioning of the bank. Does it really make sense that banks would be charging a specific amount of money from the people? No, no. It increases the bank's profit as the customers are charged extra for core banking. The point is, you cannot charge extra for core banking. That is the bank's internal affairs. So this is not a logical point. Rest everything is logical. It is used 24/7. It has helped the bankers a lot. It is helping. Just a little training is required definitely, because the CBS is not an easy software to understand. It's not that user friendly. That is something, one of the realities of CBS. But the point is, the one who are able to use it, they had been using it very well, right? So that is one of the realities regarding the CBS, but it doesn't really add on any charges there, isn't it? Then, which one of the following can be considered as an agency problem in FM? If I talk about the agency problem, what do you mean by agency there? पता है, there are two specific major parties in FM. First is, they say there are twin objectives of FM: profit maximization. These are the basics. When we started with FM, these were the basics that I was told. That there are two aims of the financial management. First is profit maximization, and second is wealth maximization. And pata hai, both of them, it's an irony, or what can I say there? Both of them are not different. If one happens, other automatically happens. Think about it there. If a parent earns good, they're always able to give more to their kids because they earn good, right? That means in this case, the first thing that happens is profit maximization. If the organization makes good money, automatically the wealth of the shareholders will also increase, provided we are sharing it with them in the correct manner, right? So in this case, when we talk about the agency problem, the first point is conflict of interest between company and suppliers, conflict of interest between company and customers, between company and the government, and then we have shareholders and the management. So this is just a way of telling you which particular portion should you choose. As I told you, I think I've given you the gist of it in the very beginning. Agency is basically between the shareholder and the management. Management is always running towards profit maximization, and the while the shareholders are always looking towards wealth maximization. Now, the wealth maximization can be in both the forms, everyone. There's no specific thing. It can be dividend, it can be the share price increase. For example, if I talk about the share price of MRF tires, I think MRF tires had crossed 80,000 net. Abhi last, I think I saw it last year only. Abhi to nahi, but yes, I think I've seen it in the last year that it was at around 80,000, 81,000. It had reached by that time. Think about it now. When these organizations are making such a huge amount of money, what is happening in this case? They are basically having a wealth maximization scenario, right? Then this is conflict of interest between the shareholders and the management. But always remember, there is no difference there. If you look at it on a broader perspective now, if the organization is making good profit, it will never have any problem with wealth maximization. Because if the organization is growing, the price of the shareholder will always, the price of the shares will always be on the increasing side. And at the same time, if they are making good profits, they are forced to share it with the shareholders, because otherwise why would shareholders stay? Because if you are not giving them their chunk of profits, and you're just keeping it within the organization itself. After a certain period of time, they will get irritated, and then this can hamper the growth of the organization. So you'll always have to, it's more or less regarding the fact nothing comes in the world for granted. If you have people who are investing in your company, you will have to acknowledge their money and their efforts, and you have to give them money. You know, that's the point. Which one of the following is true? Now, which one of the following is true? Higher debt or equity ratio increases the profit margin of the company. Debt equity ratio is an indicator of solvency of the company. A high current ratio is always an indicator of efficient management, and depreciation is not an expense and should be excluded while calculating profitability ratios. Always remember that depreciation is an important expense. It is never given respect only and only in terms of cash flow statement. Rest every single area has given respect to it. Cash flow and fund flow are an exceptional case. Otherwise, even the income tax says that depreciation is a compulsory expense that is to be charged. It happened, it didn't happen. You have the proof, you don't have the proof, it doesn't matter. But it is compulsory. Which of the following is true? Higher debt equity ratio increases the profit margin after a certain limit? No. Debt equity ratio is an indicator of solvency of the company. True, because it shows the whatever money we have, do we have enough to pay off the people or not? And a high current ratio is always an indicator of efficient management. If you have too much of current ratio, that means you are having too much of liquidity in the organization. What are we doing if you are having too much liquidity? While if we can put it in the FDs, even we'll get a greater interest rate, right? So because you don't get anything in the current account, na? So that means if you're keeping too much money there, too much money in cash form, what will you do out of it? Is there any benefit that you might get out of it? Nothing, right? So there can be this point that which of the following is true? The point is only and only B. Debt equity ratio is an indicator of solvency. Next question. A sinking fund is created when there is a need for a specified amount of money, when the profit of an enterprise is more than the requirement, as it is mandatory, or to take care of the future working capital needs. A sinking fund is created. Why do we create a sinking fund? Basically, what happens is I know I've just bought a car today, and after 10 years, I'll be changing my car. After 10 years, if I would like to buy a car of 20 lakh, is it really making sense? No, it's not making sense. Why? Because at that point of time, I'll have to fetch out 20 lakhs right away from my business. If I can save each and every year for that particular time, that after 10 years I'll change my car, then in this case it makes a better sense. So we'll be starting that money putting from today itself, and there would be compounding of interest as well, because it is in the market or in the form of any FDs or something. In this case, we will get interest on interest as well, right? Sinking fund is that particular thing. You can say it's just a piggy bank in which we are saving for our future expense, right? That is why it's called a fund there, and it is covered under fund based accounting. So what happens in this case is when there is a need for a specified amount at a specified date in future, we look forward to this method. Which one of the following is correct? The bonds can be issued only on call option. Bonds can be issued only on put option. Bonds can be issued between call and put option. It cannot be issued on call and put option. Let's talk about what is the difference between call and put option. Under call option, the company can call people before time and ask them, sir, I have money. Shall I pay you right away? That is called call option, where the investor can come to the to the company there and say that I would like to get my money back before the particular time period that you stated. That is called put option. That means both the options are normally there in terms of the bonds. There is no specific kind of those, so the bonds can be of both. That is put option and as well as call option. Right? Next question. Which one of the following statements is correct about the forward rate? Okay, there's a difference there between forward and future. Said the difference is forward is related to the area of the OTC, that is over the counter, right? In this case, two parties will sit and they'll decide that this is after this much period of time I would like to buy the currency of the company. In case of direct rates, if the forward rate is more than the spot rate, the base currency is at premium, it is true. If in the future it is going to be more, then it is premium. In case of direct rates, if the forward rate is less than the spot rate, the base is at a discount. Correct. The forward premium or discount expressed in basis points are called forward points. That is also correct. So in this case, all of the above are correct. So that's it for the day, everyone. I'll be meeting you tomorrow for the same topics further there. We'll be talking about the JIB examination further because counted days are left. So I hope you are putting your best foot forward. And have you reviewed our revision batch yet? If you haven't, then kindly go ahead and check it out. Okay, let me show you where to go in order to look forward to this. There it is. Where you need to go is www.247.com. You go on to the area of JIB and CIB and have a look at the JIB, CIB. In terms of this, you can go on to our area of JIB Kamaha Pack. Under the JIB Kamaha Pack, you are getting everything. Our regular classes, this revision batch, the test series, recorded videos, e-books, whatever you are looking forward to, everything is there. Right? There are triple two e-books that are available in this case for all the classes that you can look forward to. That means while going through the revision batch, if you feel, nay, I would like to go through something in more detail, and if the live classes are going on, I would like to review it. And do you know that you can take up, if you take up the JIB Maha Pack, this means you will be able to access both English medium as well as the bilingual batches. In both the batches, you can look forward to the classes there. That means there is a balance in terms of your studies. You get more content and a lot of things to look forward to before the examination if you are looking forward towards the resources as well as good mentorship. Right. This would cost you 6499.80 and the validity is for 6 plus 6 months. So if you're looking forward to it, so then kindly hurry up and look forward to it as early as possible, because at this point of time for 7,000 you will get it for 12 months. That means not even 1,000 per month is there. Right? It is around 500 600 rupees per month. So the perfect position is perfect timing to buy the particular JIB Kamaha pack is this. And if you're looking forward to both JIB and CIB and get it done in one go, that is also there, and that too it is way more economical than these Mahapacks. Then if that is called the area of JIB CIB Kamaha pack, one Mahapack and you are thorough for both your JIB and CIB examination resources. That means you can take up the Mahapack, in which it would include 2 years of validity, both JIB and CIB. In terms of CIB, when you will be preparing, all the electives are covered. That means you will have time to choose what exactly you are looking forward to. You can go through the various classes and see which particular elective subject you would like to choose. E-books are always there, live classes are there, and at the same time, in terms of our classes, then you can also take up the revision batches. Whatever revision batch would come up, that is available for you. In this case, all the case studies are there, the numerical batches, any batch that would come up is available for you. Plus that is there in both English medium as well as bilingual. So both these areas would be open up for you. And along with this, if you are looking forward towards only a revision batch, that is also there. So that means you'll need to go to the JIB 2023. The selection batches are going on, which is detailed batch, and then the next thing that comes here is that JIB Power Pack batches are going on. In the Power Pack batches, you will find all the details regarding our classes there, right? So JIB Power Pack batch for each and every class is separately available. Plus the Power Pack batch together is also there. So if you're looking forward to it, then kindly go ahead and check it out in on our website or in our app for further details. And if you're looking forward to for your examination, then kindly hurry up, make a decision if you're looking forward towards our guidance and our content there, because the delay will cost you another attempt. So it is not beneficial. It's better that you get it done in this attempt only, and the first attempt should be your last attempt, right? चलिए, I'll be meeting you tomorrow at the same time. So kindly go ahead and check out the details of our products on our in our app for further details, or you can look forward to our website as well. But in our app, you will get more points there, because accumulated coins can be used to buy anything, right? So download our app for further details, and at the same time,